Maybe the consumer is just far more resilient than people wanted to believe. And that is going to carry you into the prospects of a soft landing.
The consumer is resilient as long as the labor market is tight.
It is.
And the labor market is one of the last things, if not the last thing, to break or show that weakness. Now, if the labor market stays tight and we don't end up in a situation where tons of people lose their jobs and it bleeds into other industries, we've seen it in tech, we're seeing it in some financials. If that doesn't happen, then the consumer can stay resilient. But if the labor market does break, which I would expect some weakness, maybe not terrible weakness or classic recession weakness, but if it does break, that's when the consumer slows down and pulls back. What I think an industry like the airlines has going for it is it's not just discretionary spending, right? It's business spending too. And to your point, we've been on airplanes. You pay twice as much as you would before, maybe 3 times as much for a ticket and coach, right? And you have to pay it. You have no other choice.
Right.
Businesses will continue to do that. I'm weary of the idea that demand will stay as strong. As inflation falls, that means demand is being held down somewhere. And for a lot of consumers that aren't business travelers, that is a discretionary spend. So I don't know that it's going to stay quite as strong.
What's a better tell right now on where we are, you think, with earnings? Goldman Sachs or United? I ask you that because in the morning you could say, see, I told you earnings were going to be a problem. That's what the bears would say. And then now the bulls would say, well, the airplanes are packed, right? The consumer's super strong. Look at what Scott Kirby just had to say at United. I know I have 2 people in my head who would argue on either side of that as to why it's right to be on their position of the market. What do you think about that?
I mean, I think if I really have to answer that straightforwardly, I think United is probably a better indication of where we are because it represents what the consumer is doing.
Okay.
The consumer is 65 to 70% of the economy. I like to know what the consumer is doing rather than what the consumer is saying. The Goldman story, you can compare that, too, to other banks that have reported as well. Morgan Stanley is another good example of that. Completely different reaction, completely different results. So the Goldman story is not necessarily representative of the entire financial sector.
Well, my point is United is certainly more reflective of where the consumer is in terms of their feeling about the economy. Willing to spend higher prices on airfares. It underscores the resiliency that has held the economy up to the degree in which it has. Why GDP forecasts are higher now than they were back then, so to speak, because things just seem a little bit better than people thought they might be. My point here, too, is that it potentially pushes the apocalypse, if one was going to come from an earnings standpoint, perhaps further down the road than we thought.
Well, so I would argue not even pushes the apocalypse, maybe prevents an apocalypse entirely. And I think we need to get out of this mindset that it has to be one or the other.
Apocalypse
it doesn't have
being
to be
like, tough recession versus soft-ish landing.
Right. It doesn't have to be so far on either end of the extreme. It doesn't have to be either terrible or some kind of booming economic scenario. I don't think we're going to get either of those, in fact. And I think there are going to be industries, even if we do have a recession, that survive it pretty well. And there are others that probably don't survive it as well. And honestly, tech has been one that hasn't survived this already very well.